All right, everyone, welcome back to the Discount Weekly, the weekly show, the Sunday macro show, the week ahead. Let's get right into it. We had a crazy melt up operation last week, and we're looking at the SPY, the S&P 500 chart here. We're going to go over it. We're going to go over a lot of things today. Let's do a simple common sense technical analysis breakdown first. So what did we really do here? And we've been saying this since the October bottom. Wouldn't be surprised to go up and tag this 618 retrace, which is the 430 level on the S&P 500 or the spiders chart. And this is a huge level. Now, I got stopped out of a short position on the QQQ, which we'll get into in a minute. And I'm going to pull back my statement to say that, this market, yes, while it's overextended and we should be seeing a correction here shortly, there's really no reason to be fighting this tape right now. I just don't see any reason to fight it. I'd rather wait for a sign or signal of a trend change, maybe a reversal candle on volume, and perhaps maybe a doji candle, something that's going to give me something to play the short side against. So I just don't see any reason to get in front of this freight train. I mean, this very strong market, because honestly, I can see this going all the way up and retesting this breakdown box. If you remember this area, we were talking about this, and this just broke down violently to the downside. Well, now that we are into the 618 retrace on the daily chart, I can see it coming up here, building more energy for another leg higher, testing this breakdown box and into the next Fibonacci level. That might be an area of interest, or a better area of interest. Let's just be patient here with this market, guys. I was just watching an interview with Stanley Druckenmiller, and he's like, right now I just don't see any fat pitches, and I like fat pitches. Well, in this equities markets right now, or in this equity market right now, there just aren't really any fat pitches on the indices unless you want to buy the market right now. That's just not my style at the moment. I'd rather wait for a pullback and then confirmation that it's going to hold. So right now, guys, just really nothing to do with it. Let's just watch and see and stay patient here. And that's really all I'm going to say about this. I mean, it's a very strong tape above all the moving averages and into some pretty heavy resistance, no doubt. But I'm just going to wait and be patient on the short side. No reason to hurry into this right now. All right, so I already have my QQQ drawings up here, my Fibonacci retracements. As you can see, it deviated out of that channel I've been talking about. I was stopped out right here at the 50 retrace because I saw it close this daily candle, and when it retraced, I just did not like the look of this. I was looking across the markets. Now, the better scenario and what I should have waited for is this type of deviation. Now, is it a deviation? Because what we could be seeing, if we head on over to the spiders chart again, kind of the same channel that I'm looking at, plus all these other things, right? Plus this breakdown box, plus the 786 retrace up here at about 450. That could get reached, right? And if that gets reached, that means the QQQ is going to go up, fill this gap at 363, and probably even higher. It could go and touch its retrace level at 786. So again, I would rather. So this is a fair short play, by the way. If anyone wants to take a shot, probably do it with put options. No problem with that whatsoever. However, I'm just going to stay patient at the moment. Taking a look at this, what I really want to see to get into this short position is some type of retracement into this channel, okay? Giving me something to trade against right here, and then pull the trigger at the 618 again, and then watch this thing fall, okay? That's really what I'm going to be waiting for here. Oh, sorry, my crappy arrow. But that's really what I'm going to be waiting for. If it's going to run out of steam at this level, that's what it should do. If it's just going to nuke straight away, but it should give you some type of top to trade against and a retracement to get into a trigger short position. All right, moving on now to the IWM, which is the Russell 2000. This is, again, one of my favorite market leading indicators. It should be yours. It's ours. Okay. Let's do a simple Fibonacci retrace right here. If I could just get it there. Okay. Where is it? Wow, look at that. So 236 retrace came right in. Markets love to mirror themselves, right? So look how perfectly it plays into these retraces and right into the moving average right here. Big day on volume. This is nothing to balk at, okay? I'm going to go ahead and do some type of bar pattern. If this was to be a bottom, right? Let's just say it's a bottom. Let's do this bar pattern right here. Starts eating time off the clock, and just humor me for a second. But if the markets are going to melt up and it starts closing daily above the 236 retrace at 182-ish, give or take, I mean, I could honestly see it go back to the 50%, right? The 50 retrace at 204. And what would that mean, right? What would that mean for the S&P, the SPY, the QQQ? I mean, you're talking off to the races potentially. You're 7, 8, 6 retrace and above on the QQQ, right? You're talking almost tagging all-time highs, the 450 on the spiders. So the IWM has a long way to go. If we're going to stay bullish, we're going to at least go up to the 50 retrace at 204. Now, can you play this on the long side? I mean, if you're a shorter term trader, the answer is yes. Maybe wait for a retrace on Monday or Tuesday. You could just stop out, right? Either here automatically, or if you want to give it some room, you could use one of these pivot points on a daily or weekly close for the long side, right? And there you have a great risk reward, right? You're risking at 168, give or take, to about the 50. Now, this is a viable trade if everything else is going to be rallying hard on the SPY and the QQQ. This is beaten down, and we like things that are beaten down on discount or sell things that are at extreme premiums, right? That's our motto. So again, keeping a lookout for the IWM and the Russell. These are the major master levels here. If I pull back, there you go. Okay, these are the master levels on the IWM on the daily chart. Be on the lookout there, guys. And as always, we'll be the first to update you. All important Bitcoin. Let's move over to it. So like I've had this channel up now for quite some time. And look, I don't want to trade specifically just based off channels, but I just like to use them as a gauge of interest, an area of interest of where this thing is, where this thing might be going. And where is this thing? Well, it's still in the channel. And if I draw this little bit of a trend line here, is it going to hold, right? Let me get the trend out again. Is it going to hold this area here? And that's really what I'm looking for. So let me move this out here, grab the pen. If it holds this channel here, breaks out above, I don't know how violently it will break out above, but it breaks out above, maybe does a back test. At that point, that's the trigger, right? That's where you would want to go long, and then you would stop out below here, or you could even get a little tighter and stop out below here. And the upside target, again, guys, I mean, for Bitcoin, I still have that upside target of 37 up to 40,000. If it's going to hold strong, right? Obviously, you would do a profit target 1 right there, maybe 2 right there, and then somewhere in this zone would be your third profit target, right? So just something to keep an eye out, guys. Obviously, it's in this channel, right? It's starting to break down of note, right? So let me do devil's advocate here. If it breaks down below this, right, this channel, and then markets start to look weak, well, where is it going, right? It's going to go tag its 200-day period moving average and this all-important level right here, which coincides with about 23,000. So just keep an eye out there, guys. With Bitcoin, nothing to do with it right now. Again, just like the famous Stanley Druckenmiller, like I said, I don't see any fat pitches, and I love fat pitches. Last but not least, guys, we are launching the weekly newsletter today, and we are going to be going over some key trades, some key macro topics. It's about a 5-minute read, and it's going to be very important as it relates to your portfolio. It's going to be launching today at about 7 p.m. please go over and subscribe to the newsletter. It's absolutely free. Just type in your email. And as well, if you're not already in the Telegram channel, we're posting trades here. We're posting investing ideas because this is not financial advice. But we're posting quite a bit. And I would just come on over here, guys. It's completely free. We're posting a whole lot of important information as it relates to the markets, your portfolio, and breaking financial news. The link is in the description as well as in the comments. Have a great rest of your Sunday and see you on the charts next week.